Boom, we are live, ladies and gentlemen. This is Tio in the Arcane Bear, and you might be thinking to yourself, oh my god, what color is the light behind Tio? I want to know where the market's at. Boom, still green, ladies and gentlemen. A nice full and fill to the bottom of the trading range for Ethereum. Bitcoin didn't even dip down there. A few of the others performed some nice springs, and we had Cardano on Kraken at 15 cents before jumping all the way back up to $1. Clearly goes to show the problems that a market can have for the downside during a liquidity crisis. It also happens to bode for the upside, but we're going to start off by taking a look at our favorite player, our dominant market player. Boom, Bitcoin here and open on the 4 hour. And as you can see, I've gone into the area chart. I want to get rid of a little bit of the noise. I added this really long-term trend line, which we had looked at a few days prior, going back all the way to $19,000. We jumped up above and are now below. But on the bright side, you can see that we, at least with the wick, if I go back to the Hike and Ashy charts, and we look at the wick that came down today, look at the wick that went all the way to the top of our resistance from the previous buying climax here. And we had talked about a potential return to this area of around $48,000, but look how very short-lived that was. Again, these wicks generally mean that it's all getting chewed up very, very quickly. And on the 1 hour, if we go a little bit closer, you can see that absorption and kind of stopping action from the supply, the massive spring or this wick just below the POC here, and just to the POC on the larger time frames as well. So basically almost to the middle of the previous trading range that we were looking at, and now closing below that kind of long-term trend and support line that we had been going over. So I think what's important to recognize is that there's a lot of people out there in the market like, oh my God, market manipulation, the price goes up, the price goes down. They all go down and up at the same time. Well, yes, clearly that happens because the market operator is everybody. Like one of the most genius things about Richard Wyckoff's work was this idea of the composite operator and how we look at the effects of basically the market movements and what we think to be one person. And if we kind of personify that market movement as that one person instead of the market as a whole, what we end up getting is this very unique perspective that in market psychology, when people are buying and selling, they're effectively promoting the stocks that they've already owned. So to drive the price up to get better results, you get a significant change of character each time this happens. Now, if you've been joining us for quite some time, you will have entered the market a long, long time ago and not to this day. Marlon, compromiso hacer un video ahorita. Compromiso. Gracias. So the market operators are usually aiming in the markup price to advertise the stocks that they've been accumulating in those long support regions to then sell effectively back to the retail investor. And that's been the kind of age-old game that's been played here. That's why these market fluctuations we can still measure today. And there's been no real change over 100 years later because we're still measuring common market sentiment from people, and that's everybody, not just like one hedge fund or like the George Soros. And by the way, he's like a small investor compared to people like Jim Simmons. So we need to remember that because of this, because of that change of the characters that are in the market, it does move like one beast. It is not just like, so it's not market manipulation. That's literally just how markets work. It's based off buying and selling. So as you can see, a massive amount of supply came into the market, a big test here. And if we go back out to the 6 hour, what's nice here is it gives us a kind of a complementary test to some of our effort versus results lessons that we've gone over previously. So right now, we're focusing on this supply character versus this supply character back here. These are both relatively the same. And what's interesting is we actually did get a bigger result this time. So here, this supply and here this supply are equal to this supply. The only difference is the amount, the depth that these moved is actually quite a bit smaller than the depth moved today. But if we cut off the wicks, then they're almost identical. So the market is testing. These are called supply tests. And what the market and the bigger players will do is they'll dump a bunch of supply onto the market to try to pick it back up at lower prices based off scaring the retail investor from these 10 to 12% moves. So it's very common that this happens. And in any case, when you kind of look at the comp operator or composite operator as a personified individual as a whole of all the market sentiments, it seems to make a lot more sense. Anyone who's talking about manipulation, I really don't think that they've grasped how the market works. So, it's a story for another day. On to Ethereum. Unique here, we've dragged our previous support line up, and we've just touched that. We wicked right through to the bottom. Again, if we look at our Heiken Ashi charts, we wicked all the way to the bottom of the previous backups trading range, and that's actually quite a nice sign to see this, because we were wondering, and we kept talking about, was there a quick slight down to the $1,500 area, and boom, there it was. Very quickly, we fell out of this traditional support area that we've been following up here, and then as soon as we did, we fell right down to the bottom. Now, here we can get into some kind of fun conjecture about the potential of, was this upthrust in distribution? Because clearly there's a lot of supply that came into the market, more supply than came into the market back here in January, but it was chewed up really quickly. And if we go to the 1 hour, you can, what's interesting is that there was not a whole lot of absorption here on the lower time frames. At least, and again, as we go closer, you'll get a bit clearer picture. Here, that absorption, not even on the 45-minute did that take place. So you're talking about people that basically just chewed this up in one fell swoop, and the only way you can see it is down here on like the 5 or 10 minute, and even then, it's quite difficult. Now we've been rising off limited supply again, which is really nice, showing still bullish characteristics within the marketplace. But again, even more importantly, this move into the center of the backup phase we have seen before, and we saw it back here with Ethereum when it did it in the predominantly stronger trading range. Now that we're in the backup trading range, this is primary, here's the secondary kind of backup movement itself. So again, the lots of people ask questions like, oh, did F-Pool shell a ridiculous amount? No, that's not the case. What you're witnessing right now is a bunch of YouTubers who don't know how markets work. And so they will pontificate, because it's literally one of the lowest forms of conjecture out there. They're pontificating about what they think is happening, and they are wrong. Now, you can side with them if you would like to. People thought the earth was flat for plenty amount of time as well. That's fine. You do you. I'm quite all right with actually looking at the data. And again, if we look at the miner net position change here, very small amount of liquidity came onto the market today. And again, the miners have to sell. That's how they make profits from the work that they can do. So it's like, oh my God, they predicted an F2 pool. Like, this is classic behavior of an uneducated market player, effectively speaking. I hate to say that about some of my other friends in this marketplace, but hey, that's the truth. And that kind of hurts sometimes, but at least we're learning something together. Currently, the pools have dropped a significant amount of capital, but way more back in January. I mean, look at how much they were dumping back in January. This is a very small amount that they've put out into the markets, and all of a sudden every YouTuber and their dog is like, F2 pool is dumping the market, manipulation. That's not how this game works. Let's look back in history. Miners have had to sell all the time because that is how their business model functions. Back here in 2013, look how much pool the miners dumped compared to what we're looking at today. It's not even a blip, not even a little tiny blip. And again, look here. Yeah, miners are taking profits almost from the day that the year started, likely to cover the rest of their costs for the entire functioning year. So it's really important to understand that this type of conjecture made by people that think the news is the leading indicator of the markets, again, really don't understand how this game works. I mean, I can see very clearly that the miners here have put very little onto the market, significantly less than they have in other months. And now, yes, it is pontification. It is one of the lowest forms of conjecture because it's baseless theory. True story. We can see it right here. I mean, it's clearly visible that this is much less market supply coming on than there was in January previously. Like 3 to 4 times more supply from the miners came out into the market in January through the beginning of February than there was today. What this does show is that, yes, a little supply in the market right now can drastically move the price. Well, how did the F2 pool have anything to do with Ethereum? And this is the important part that we were just going over. If you look at the way the market moves, it is almost as if it is a single individual. And that's because human psychology is interrelated to one another. We all live on the same planet. And very clearly, if something happens, we react to that. The pandemic was a perfect example of how everybody kind of reacted together on their own terms and did whatever it is they want. It is absolutely a BS theory about F2 pool dumping and other correlation to miners, because what did that have to do with Cardano? What did that have to do with Ethereum? What you're listening to is YouTubers who are just talking, in my opinion. That's it. I don't need to know this crap news. But anyways, you can continue to spew crap if you'd like, but that's really all you're getting out of your mouth. I would rather listen, and I listen to the markets here. And when the market all moves like that, it is clear to me that it has nothing to do with the pool. It's funny. So again, Ethereum looking nice. Clearly a nice spring into the backup phase. We've talked about these types of movements before when we've gone over the Wyckoff reaccumulation patterns. This one specifically is reaccumulation schematic 3. We were seeing dips in phase C that actually move the spring all the way to the middle of the backup phase, effectively, like what we're seeing here. So if I go through, I clean this up just so we'll kind of look at this one phase of our SOS and our trading range here. What we were seeing was the SOS, its primary move outside of the box, and then it's returned to the center. Now this spring here, right off the bottom of the trading range, was really nice to see, because again, I think it represents this schematic 3, but with clearly a dip into the middle of the trading range. So everything still looks bullish to me. There's nothing to move my market conjecture to the downside. Now again, if we were to see clear closes below the resistance and then the support, okay, well, that's a different story. That would change the whole game plan. But currently just touching the resistance like this is beautiful. Same with Ethereum. Like, this is beautiful. We had talked the last 5 days about this potential market return down to $1,500 for Ethereum, and we wicked right into it. Again, I'm not trying to predict it. We're just looking at where the main areas of support and resistance are on these trading ranges. So over to Cardano. Wow, watching this morning was absolutely ridiculous. But here, again, nice big SOS phase, and then the backup, which returns right to the center of the box. Now, if you exclude this crazy fucking wick that came out of nowhere, all the way down to 15 cents for Cardano on the Kraken exchange, just clearly goes to show the difference of people who understand how the market works. Here, what we had was a liquidity issue, most likely on Kraken, where someone wanted to sell a bunch, sold it on Kraken, not realizing that the amount that they were moving drastically affected the market. They probably got burned a bunch of other people really, really massively here on this trade, because we went down to 15 cents and then I watched it jump back up to $1 in less than 35 seconds, pretty much. So it's very, very important to recognize the characteristics that come out of this stuff. A lot of people like to make stuff up, right? I'm trying my best every day to learn why the market reacts. And it's not news. News is like a lagging indicator. Anyone who thinks the news is a leading market indicator doesn't know shit about the markets. Unless it's like take the pandemic, for instance, right? If we go back and we do a retrospective analysis of the pandemic, maybe we'll do this in a minute afterwards, but if we take a look at a retrospective analysis of what Bitcoin did during the pandemic, nobody fucking cared at all until it was too late. Right? So if you have been joining us for quite some time, you would recognize and remember that in February, I was making videos being like, hey guys, I'm a little worried about people falling over dead in China. Like, doesn't look good. You know, I'm not a doctor or anything, but this doesn't look good. So the way back here, when we went right into our spring, I actually went short Bitcoin from around $8,500 and caught this nice swing downwards. Rebought back in around $6,000 and closed my short here. So I made a nice chunk, but I was a little weary until we hit this reaccumulation range. And you guys will remember back April, May, I was like, fuck, reaccumulation, we're going up, baby. And we did. But the point of this is, this moment here, this psychological moment, you actually had tons of warning that the news had already taken place. The news had already taken place. February 20th, are you kidding me? I was already preparing for lockdown February 1st. I was like getting food ready. I'm like, I got enough cash on me to last 6 months, 9 months. I'm like, I'm good to go. My electricity is all good. I even thought about upgrading my solar. I had 2 months before anybody realized that there was anything going on. Right? So news is a lagging indicator. Clearly the news had already happened, but people didn't like grasp what it meant until they started closing borders. For those of us like people who like Nassim Taleb or some of the other like clear thinkers during these downtimes, had a clear advantage over those who don't know how the market works, right? Because the market was reacted way later, but the indicators were already there, and they were there in the market for multiple reasons. Number one, we hadn't even had a spring in Bitcoin yet. Our entire accumulation range hadn't had a spring yet, so we could assume that something bad was coming. And that's a whole nother psychological factor that maybe we'll get to one day, but you need a pretty open mind to get there. So we'll kind of ignore that for now, and we'll go back to our regular charting program. But for those of you that know, I'm sure you already know, and that's clearly a strong indicator for how powerful consciousness is itself within these markets and how irrelevant the news is. So Cardano made a really nice SOS phase. We saw big SOS, nice backup. Everything's looking really clear and really strong here. We saw this very nicely for Uniswap as well. Uniswap had a clear out of the box breakout the other day to around $30 and has now created its backup phase pretty much right to the top of the resistance. And this is nice because it aligns with what we were seeing with Ethereum, is that we actually returned finally to the top of our trading range, or sort of to the middle of our trading range here, which is kind of what we wanted. We wanted this supply test of this trading range, and we got it in pretty much every single ecosystem. Here in Uniswap, you can see clearly the our point of control right down the center. We almost wicked into that. So this is a really healthy normal market indicator. Has nothing to do with anybody dumping or like people manipulating the market. It's just what happens when the bigger players want to test the supply and scare the shit out of little people who are following the news. Like, oh my God, F2 poo. Sound like Cartman. That's what those people remind me of, is it Cartman. And I mean, don't ever neglect Cartman's convictions. He did some crazy crap, but he was not really all that good. Okay, next thing. Oh yeah, a bit of a deeper spring here on Avalanche than I expected, but it looks like we're getting the finality of the spring here. Big market test right into our preliminary supply. It was a little bit hasty. I entered my secondary positions here at around $40. So, but again, spot price, I'm not worried at all. We're still early in this market cycle, but I definitely was a little early on that shot. Clearly, GRT again right down to the bottom of the trading range. So again, making it look a nice spring, and more importantly, look at the volume characteristics or the supply characteristics that we have going on right now. Very the depth here is really what's interesting to me. Big amount of supply coming into the market. Test the bottom of the trading range. Spring right back up. Look at the length of these wicks on both the primary shakeout and this what could be basically a spring of the reaccumulation schematics. So I feel very confident that, yes, the light is still green. We are still in the bull market. There's nothing to be worried about. This is just a general market supply test. There is nothing that alludes to me in any way that there's any type of out of the normal selling going on by any pools. In fact, there's less selling than the pools this month than there was in January. Okay, clearly, here it is. That's what it looks like. Here's the pools selling in January, 4 to 5 times more Bitcoin than they're selling right now. So, ta-da. Yeah, and again, people like Kurt Johnson are like, did this guy look at how much our F2 dumped? It doesn't fucking matter. I can see it right here. How are you guys so silly and missing that? Like, you're little babies that know nothing. Shush. You're disturbing the rest of the intelligent people who know how this game works. F2 pool did nothing. Like, again, look at the market dynamics. So we can see it right here. Here is the last 2 months of miners selling. Okay, yes, clearly they have been selling, but 4 times more they sold in January, December to January, end of January. Okay, so you're telling me this little blip today makes any difference? You're talking about hundreds of millions of dollars. Yeah, it's baby stuff. Crypto quant nonsense. They're just making shit up to try to drag you in. I promise. I can clearly see right here. This is less selling than the miners have been doing for the entire month of January. I don't need any more like BS information from some YouTuber. But thank you. Not necessary. I don't need your crap noise. Okay. Yeah, these are all the pools of miners, by the way. This is all of the pools of the miners. So yeah, sadly, people like Kurt here don't know anything about how the markets work. Bye-bye, Kurt. Okay, so I had a lot of fun today. I think that was kind of the clear conviction of the show today. We're clearly still in the bull market cycle, nice into the mid of the trading range. A bunch of newbie traders who don't know anything about the markets are scared by F2 pool news again. How surprising. Total BS. They fall right into the trap. Oh my God, manipulation. No, it's not. Here it is. Here's the data. Clearly still everything's great. Calm the fuck down. I will do, give us a thumbs up if you like this content. I will spend the rest of this episode going over some of your guys' thoughts and questions. If you have anything to say about F2, just go watch some other YouTuber. I don't care. I've already gone over why I think it's bullshit. So congratulations. You will win stupid prizes for playing stupid games. I'm sure of it. Nice. Okay, so I see some of you guys want me to look at Link, and Link is definitely normally on the top of our list here. I think I must have accidentally closed it. The other thing I want to point out, guys, as well, is that it's better to look at less data. You come to a much sounder conclusion than looking at a bunch of people's ideas. Generally, I follow only my own insight because it just pays off exponentially. Wow. Okay, so here's something interesting about Link that does not look healthy. Okay, and I've talked about Link here before using this similar conjecture, which is that this does not look good to me, first and foremost. And Link has had this the whole way through, and I do suspect that this is because of the said Link Marines. This is generally the occurrence that you get when you don't have, you basically don't have intelligent market players in an ecosystem, and what you get is the kind of the fringe nonsense of what they're playing is. So here, why are my regular trading range tools not showing up? But yeah, something that looks unhealthy in Link right now. And again, what I suspect is that what we're basically witnessing is a large amount of fluctuation from basically newbie players. Oh, there it is. Okay, good. So here right now, what we want to go over is let's get rid of our momentum indicators. I've talked about this many times before. And when you see people like retail, let's call them retail armies or retail Marines, you get this massive volatility springs throughout the ranges because this is a bunch of people that don't know how to be in an ecosystem, and they cause this volatility. Now, the downside, what I don't like is how little supply had to come onto the market right here for Link. This little supply created this massive move down, and that's not healthy. That's this is a kind of a, let's say, a scary moment even for Link. Now, this to me represents probably a stronger SOS and backup phase, effectively, because we did come right back to the top of the buying climax trading range right around here where we had our predominant parts, kind of similar to the way we were looking at Bitcoin and Ethereum, so that we had our primary trading range here. Let's see. Jesus. Our primary trading range here, and it looks like we came right to the top of that. So we had a very nice strong breakout. I was a little early on this being the spring potentially. This was our SOS, and then this is our SOS backup. Now, if this is the case, it's a much clearer, stronger division for Link. My only worry is how little supply needed to come into the market to drop it this much. Yeah, a little bit concerned when you see this small amount of supply, because here's the effort versus result. Here, like, look at the effort it took to get the supply, the price down just a few percent here, previously to here, massive supply check down, and very little supply needed to come in to do that. When we start to see those signs, it's time to be a little more concerned about positions here. I mean, mind you, had you entered Link in December, you're up a few 100% already, I would be cautious. Well, in general, it's always good to be a kind of a cautious investor, to be okay with where you're limited, your risks are set, and how you play your game. But when I see things like Link Marines and just in general, anything that's more of an occultist than a good investor, I start to get worried, because I know that those supply checks can become dramatic. And that's what I think we witnessed in Cardano as well, or just this very overly dramatic supply test based off retail's interest in this sector. We've seen it with XRP. We've even seen it with Bitcoin through certain areas, much so less now because you have a lot bigger fish to worry about. It baffles me that people don't know the basics of markets in any way, shape, or form. The fact that multiple people are posting about F2 in the conversation just goes to show how many basic noob retail investors they are. And that's another reason to be clearly like a bit more cautious in the market, because when that many kind of, let's say, for lack of a better word, unknowing retail traders show up, it means that we're getting closer to the top. I figure, let's say we're like 9/16 the way to the bull market now. So like just a little bit over halfway. And the more of these kind of ridiculous people that show up, the higher the level of chance we can tell that they have no idea what they're talking about. Like the fact that F2 has showed up in the conversation multiple times just goes to show that they don't really know anything about what they're talking about. So it's kind of funny to see. So take a look at a few more of your guys' questions. Today my portfolio dropped by twice the total value I had last March. Did I worry? No. Yeah, that's funny. We're up very high. So even these market supply tests can be very noticeable in terms of the percentage-wise that we've gone over. I mean, for Bitcoin, from the nice little top of our range here down, I was a 15% dip. Right? This is a high level of volatility in the market, but still clearly above the range. So, yeah, I guess, right? Yeah, exactly. People, I know, again, anyone who's getting that many views is clearly getting followed by children most of the time. What's F2? Yeah, that's a great point. Exactly. Who cares? You know, we can skip all that noise again, guys, here with Glassnode. This allows us to check all of the miners and how much they've sold on a day-over-day basis. There's no need to think about one miner. We can see how much all of the miners are selling on a day-over-day basis here. And we do that. Another kind of fun supply check here is we did see a nice chunk of Bitcoin come onto the market in the last... yeah, here you go. Check out the exchange balance percent stacked coming on today. We jumped up. It's the first time we've seen an uptick of around 0.2% in the market effectively, which is, again, a big chunk of Bitcoin that came onto the market in the last 24 hours, right? So it's not a small amount. Like, I'm not saying that the move is not a small amount. Clearly, it's a large amount of Bitcoin. I think if we look at the exchange balance stacked, we can see even where it went out. You have a large amount of Bitcoin moving onto specifically. If you look back the day before, you have OKEX at 119,000, and then all of a sudden they jump up to 120,000. So a massive amount of Bitcoin, or well, not a massive, like let's say an extra 20,000 Bitcoin came onto the market in the last few days. Got shoot up very quickly again as well, but only on one exchange. Like you can clearly see that it was one exchange that took the majority of that volume. Boom. Anyways, kind of fun. Again, I do like to do these kind of deeper dives into why the market kind of moves with the price. Obviously, we've gone over this a few different times, but the exchange balance stacked is a pretty big indicator. And here, look at the big wick up. The last time we were this low on Bitcoin on open exchanges was back January 30th, and we've jumped up 0.2% from 12.6 to 12.8%. So 0.2% of all of the open Bitcoin came onto the markets here effectively. So I'm not particularly concerned, but this is a noticeable change to the upside. And again, miners are a business. They need to take profits to effectively continue to run their business. So it makes sense. And I mean, we could probably go to Grayscale and be like, how much did Grayscale buy today? Grayscale's probably buying hundreds of thousands of Bitcoin on pretty much a day-over-day basis, or at least hundreds of millions of dollars worth of Bitcoin on a day-over-day basis. But this is the first kind of big upcheck we had. And look what happened the last time we had this uptick. Back in January or July, we had a big uptick, and then supply fell off the market day over day over day. So again, this is a supply test. In my mind, it looks very clear to me when we look at these trading ranges and the strength that we still have in the market right now. So I'm not particularly, I'm not concerned at all. You know, and guys, just as a heads up, the idea of buying the dip really only works during a bull market. If you buy the dip, well, you can look, if you just buy all the time, you can just accumulate every day. We've gone over this sentiment. It's called the best investors are dead, which is you can accumulate, never touch your portfolio. It'd be extraordinarily successful. But buying the dip works really well every day after the pandemic because, or just you could have bought at any high or any low. You didn't even need to wait for a dip. You could have bought anywhere in the market range. And that's the fun thing about a bull market. It's also the very deceiving aspect of a bull market as well. So be cautious. Again, when we see how many newbie traders are showing up, newbie investors that are following BitBoy through leveraged ideas and just losing capital, we can tell we're getting much closer to the end of a bull market. I don't think we're there yet. I think we're going to have one big face melter that comes in, and then it'll be over. And once the bull market's over, it's like done in the blink of an eye. One day we're in a bull market, and then we're not in a bull market. It's a pretty crazy one. I have no current BTC price prediction, but just off a rough kind of stock, I mean, I don't like the stock to flow model per se, because it's based entirely off the demand cycle, not just the miner cycle. But if we look at a rough estimate of what the demand and miner cycle has provided in the past, we do see that we could end up well over $100,000, maybe upwards of $200,000, and then probably a quick drop back down to retest this area. So we're cooking along pretty hot right now, and we're above. Like even if you look back to where we were in 2017, we had not crossed over the stock to flow model before. We're actually crossing over that model right now. So this is the other interesting part, is that miners know there's a future projected price to producing the Bitcoin. So here we can see clearly that their cost of producing Bitcoin is where they effectively try to sell around. That's why we had such a strong support around $6,000 before we broke below, jumped back above, came below, above, and then back below, and then mellowed at around $6,000 for the last part of this trading range. So this stock to flow model, in my mind, could have us as high as a few $100,000, and then a fucking glorious bear market cycle smashing us back down to like $100,000. Yeah, it wasn't a glitch on Kraken. This is just what happens when you have a very illiquid market. Rafael says, big respect to you. All you said about possible plays came true. Again, I'm really just trying to, I'm not trying to predict the market, guys. We're just looking at the best way to study and share this information so that you can be as cool and calm as collected. So for those of you that don't know, the disease of the early stage investor and the trader comes from over-emotional trading and lack of education. And the best way to cure that is by joining a healthy environment of other people who are studying, educating themselves, and where you're surrounded by peers who have already been successful. So if you like trying new things and you find yourself to be adventurous, go to arcanebear.com/private or the links below and join our private group where there are over 800, almost 900 members working together. We do weekly updates, private webinars. We've got doing a virtual classroom now, and we're producing multiple PDFs. I'm actually a big shout out to our boy Baloo for doubling down on the workload this month and helping me keep things together, and to all of our private Kodiak administrators and polar bears, etc. Yeah, I love it. Yeah, I'm looking forward to the glorious bear market cycles. It's a lot of fun. Seabass says, thank you for all your work. I really appreciate it, Tio. Thank you. Love it. Private den keeps you calm. Yes. Yeah, the prices on Kraken were real, but this is what happens when you have an illiquid supply. Cool. So yeah, we went over Avalanche. We're just looking like having a deeper spring. I really didn't think we would get pushed this low, but apparently no problem. Again, because I took a secondary entry here at around $40, so kind of chewing that one up on the moment. But this is why I only buy spot when it comes to my more venture capital plays. This is a big spring here. Definitely didn't think we would get this low. I thought for sure we would jump back above the POC yesterday, but can't win them all. Again, we made a bunch of killer entries in Avalanche already, back basically through $6 to $9. So I was quite happy about my position to begin with, but I doubled down the other day, being like, "We're going for Avalanche." It was my fault too. I got too excited. I apologized the next day. I'm like, "I'm sorry, guys. I got way too excited." Like, why do I like Avalanche so much? Because my tech team is smarter than you, and they've been right every time before. They're smarter than me too. Hold on, let's be clear. My tech team is smarter than I am. Yes. So chew on that. Raven did really well. This is another reason why I think it's important to kind of look at how venture capital can play out for you. Raven is up almost 12x in the last month or two. One of the baby Bitcoin ideas that we had gone over in our previous newsletters back in 2019 or 2020, early stages of 2020. Just a massive run up of price here since February. Look at the movement from February. What do you got? Let's go January 28th, 1,600%, and a big reaccumulation range. Again, we're seeing a lot of these bigger reaccumulations take place, but look at the sheer growth that came out of Raven here. Like any number of people, and this is why I really try to enforce the lessons of how powerful venture capital can be, which is if you had $1,000 there in Raven just sitting there, it jumped up to one point to worth $20,000, which is incredibly high. So again, I think the importance is to understand that a small amount of money can go a really long ways if you think about how venture capital works. Yeah, it's definitely about the tech. For those of you that are new here, often it is definitely about the tech, because you have people that have a hell of a lot more money than you do, and you should recognize that. The people that have a hell of a lot more money than you do have lawyers and tech teams that can dive in and do a significantly better deep dives than you ever could afford to do. So if you follow where their money is, you can generally kind of pick up on why those things are so valuable. Yeah. I have no idea what Hathor is other than some old Egyptian god. If my tech team didn't tell me something about it, I really don't fucking care. Random people telling me things on the internet has never been useful. People that I trust, that I know that have been making venture capital investments for years, were early investors in multiple companies, great build and returns and auditing code. I trust them because they're smarter than I am, effectively. Anyways, we'll leave it at that. Thank you guys all for joining us today with this Tio with the Arcane Bear. Yeah, everything looks great. Ignore the nonsense. Stay focused on your education and tune out the noise and the news because it's basically garbage. You can ignore that. We did see a nice spike in the VIX today. I will kind of end with that. We did see a nice spike. For those of you that are part of the private group, I keep an eye on this all the time. Saw a massive volatility spike came in this morning around 10%. So whole market went red pretty much, including, I believe, the S&P 500 even opened red at the beginning of the day. Yeah, 387. You've got Michael Burry talking about hyperinflation potentially being right around the corner. And yeah, the S&P 500 here dipped significantly as well today based off that VIX jump. So the whole market is moving. It's not just our little space. It's kind of everywhere. So keep that in mind. I really appreciate all your guys' support. We will see you again on the next episode. Leave your thoughts, your comments down below. I do leave them. I do make them all private until I approve them, because there's just too many people trying to scam other people with, send me Bitcoin, I send you Bitcoin, and we all send Bitcoin. Just everything's private, and then I approve the ones that way no one gets any of this scrammy crap that ends up from people that can just post, because YouTube does a horrible job of regulating that, so I have to pre-regulate it. Thank you guys all. Go outside, enjoy your love, enjoy your life. Give give your partner a kiss, hug a tree, all those fun things. Jump in the ocean, swim in an ice bath, and breathe deep. Stay with the Arcane Bear. We'll see you guys in the next episode. Boom.